Okay, welcome everybody to today's webinar regarding the IBEW Local 353 pre-retirement webinar. I'm Dominic Martino, your pension and benefits manager here at TBIS. Before we get started, one thing I just want to make sure everybody's aware of is that whatever we're talking about today is based on today's plan rules. So anything we talk about the pension, anything about the benefit are all based on the current plan rules. As those of you watching this video are aware, there is an annual special call meeting where things can be voted on. There may be changes in the future. So just be mindful that whatever is discussed in this webinar is based on today's current plan rules and provisions. Here's a couple of items of the agenda items that we'll touch upon today in today's webinar. We will touch upon a few facts. We'll look at the pension plan, the 353 benefit plan. We'll talk about a few other benefits that are out there for you folks. And then we'll talk about things that people don't want to talk about. So there's a few things here in today's webinar that to get you thinking about retirement, planning purposes, things like that, to put your mind to different scenarios that you may or may not have thought about. So here at TBIS, our goal is to strive to be a trusted source of information and services to our stakeholders. We're here to provide administrative service in the multi-employer construction sector for you, the members in this plan for the pension and benefits program. We're always here. We're here to be there to support you and your family members. We're here to be accountable to you. We're transparent, and we're here to respect everyone that's on watching this video. As always, we're here to help. If you need to access us or reach us, you can always call us at the phone number 416-637-6789, Monday to Friday from 7:30 to 4:30. As always, you can also email us at members@tbis.com. And you can always visit our website, tbis.com, which is our main website where you can access general information. You can see the newsletter there. There's the general pension booklet, benefit booklet are posted there. Also, we have the secondary website, the mytbis.com website. Now, that's the portal website where you would be registered to log in to see your own personal information. Once you log into MyTBIS, there's a variety of information there, including your contribution statements, past pension statements, and again, newsletters, benefit booklets. A variety of different information is also available on mytbis.com, but that's your own personal information that's posted there. So here's a couple of interesting facts around our IBEW Local 353 pension plan. We have over 16,000 members with a pension entitlement in our plan. The current average retirement age is 63. The average pension is about $1,900 per month. And we have over 3,400 retirees with an average age of 74. One thing to note when we're talking about pensions and something that to be mindful of is that in Canada, the fastest growing age group are individuals turning 85 and beyond. This is the fastest growing age group in Canada, and it's expected that the population is continuing to age and that people are living a lot longer. So when you're paying attention to today's webinar, keep this in the back of your mind because many individuals do retire at the early retirement age of 61. And then think about the fact that many of you will live beyond the age of 85. And if you have a surviving spouse, they may continue to live beyond you. This is important information to note when you're thinking about your income, your future lifestyle. All these things come into play, knowing that in fact that you may retire as early as age 61 and may not work again after that, and you may live until beyond the age of 85. So now here is some information regarding the three pillars of retirement in Canada. So what this means is, where does your savings for retirement come from? What does it consist of? In Canada, they're known as the three pillars of retirement. The first pillar is the government-based programs, such as the Canada Pension Plan, or just say age security. We are going to touch upon some of these programs later in the presentation. Then you have your own individual savings, your own personal RSP, tax-free savings account, your own non-registered account, other investments you may have, be it real estate, stocks, whatever that may be. And then you have the third pillar, which is employment-based programs, which includes your IBEW Local 353 pension plan, your IBEW 353 group retirement savings plan, and potentially if you have any other pension plans through former employers. So one question we get here a lot at TBIT is when can I start collecting my pension? Well, again, it is a personal decision. It's a big decision, but again, it's never too early to start planning for your retirement. So, but a couple of things to think about. Because it's not just about collecting your pension. It's what is your plan in retirement? What is your lifestyle? What's your current family health history? Is there any disabilities, any health concerns? Are you going to continue to work once you do collect your pension, right? And what are those other sources of income? Where is the money going to come from? What about your time? What is your goal once you are retired? Hmm? So some of the sources of income to consider, which we are going to talk about today, we are going to talk about your IBEW Local 353 pension. Then you also have your RRSPs through the IBEW Local 353. Then there's the international pension, which we'll talk about briefly during the webinar. Then you have a couple of the government programs out there, such as the Canada Pension Plan, known as the CPP. Then you have Old Age Security, OAS. There are some other government programs out there. Then again, you have your personal savings and potential other pensions through other former employers. I'm going to take a moment here now to share a video with everybody. So we'll just play this video.
I'm an electrician, not an investment banker, and I never really understood how our pension plan works. But I get it now, and I want to help you get it too. You might be surprised to learn that your pension plan can become one of the most valuable assets you will ever have, and it's for life. It grows with contributions made by each hour you work for an IBEW Local 353 contractor until you retire. Then it pays off for the rest of your life. Your employer contributes for every hour worked based on the rate in your collective agreement. The more hours you work, the bigger your pension gets. Everyone in the union contributes to the same big pot, and the money gets invested by professional investment managers in stocks, bonds, that sort of thing. Our plan is what's called a multi-employer pension plan, or target benefit plan. Every year you get a statement telling you how much you can expect to receive in retirement. That number is the target. Of course, it's possible your pension payments could end up being higher or lower than the target. Plan performance can't be guaranteed, but the plan hasn't paid out less than the target in all of the years it's been run. Remember, when you're ready to retire, your pension plan will be there to help you live a more comfortable life. And the more hours you work, the more your employer contributes, the bigger your pension is going to be. Your buddy or spouse may have a pension plan that works differently than ours, so it's worth learning about your pension plan. Visit mytbis.com today to learn more about your pension plan.
So that's a brief video. That's available on youtube.com. Again, do take the time to visit our YouTube channel. And there's some other videos posted on there as well when you get a moment. So a couple of things about our pension plan here at the IBEW Local 353. How does the pension plan work? How do you get those numbers that show up to the various pension options that are available to you? So basically, during your working career, there were pension contributions put into the pension plan. There is a pension factor that's tied to those contributions. So the current pension factor is a 1.20. So basically what that means is that if you have a $10,000 contribution made on your behalf to the pension plan for the year, You times that by the 1.20 pension factor, you've earned a pension of $120 per month. So over the years that you've been working, your contributions tied to that pension factor that was in place at that time are added together over the years to come up with the numbers. But then at the same time, depending on your age, if you have a spouse at retirement, what their age is, all these things factor into the numbers that are generated to come up with the various options that are made available to you. One thing to note that I'm sure many people are familiar with the quarterly contribution statement. Why it matters to the contribution statement at this time is this is where you would determine your hour bank balance. So if you're looking to see what your hours are when you're trying to determine eligibility for retiree benefits, things like this, you would take a look at your contribution statement, and we'll touch upon that a little bit further into the webinar. But again, just to recap what the contribution statement is, this is available every quarter. It is available on mytbis.com. It's also mailed to your home address. It notes who your employer is each month, the hours that you worked each month, and that contributions have been received in the various trust funds, and it's listed on this contribution statement. At the bottom of the contribution statement, it would reflect your current hour bank balance, and that's also available on MyTBIS. Okay, here's a screenshot of your annual pension statement. Now, this is just to give you an idea of how complex the multi-employer pension plan is. And those of you that, as a member of the union, participating in one of the most important family assets that you may have out there, take a look at this particular individual's pension that's shown on the screen here. You'll note that they've had approximately $11,000 contributed to the pension. Now, this individual is expected to earn $137 a month, right, which translates to approximately $1,600 a year. So now let's just say, for argument's sake, that the individual lives for another 20 years. That means that the potential that this person might potentially collect $3,200, $32,000, I should say, if they live for another 20 years after that. So as you can see, it's the pension plan has to work hard. The board of trustees oversee various investment managers, actuaries, to make sure that the pension plan grows, the contributions grow to be able to generate sufficient monthly income to continue to pay out the pensioner. In this particular individual's case, there was $11,000 worth of contributions put in. There is the potential that they can live another 20 years, and they may end up collecting over $32,000. So that's why these types of pension plans, such as ours, this multi-employer target benefit plan, is complex. There's a lot of individuals that are involved, a lot of information that's presented, a lot of work that's required to ensure the longevity of the pension plan. Now, if you note earlier on in the presentation, I made the comment that the fastest growing age group in Canada are people turning 85 and living beyond that. So it's important to note that this type of pension, your IBEW Local 353 pension, is payable for your life. So that's very, very important, especially in the situation where people are living a lot longer, and there's the potential that if there's a surviving spouse, that they're going to continue to receive the income onward, going after your death, beyond your death. So yeah, here this is just to give you an idea of the calculation of the pension plan, and this just gives you a little bit of a better idea with contributions, the pension factors that may have been in place at the time when those contributions were received. So in this particular case, this individual qualified for an unreduced monthly pension because they met the eligibility for the early unreduced pension, meaning that they had a pension contribution come in within a 24-month period prior to the age of 61. So in this particular person's situation, they qualified for 61. How did they get to that $2,919 monthly pension? Well, over the years, they had the contributions come in. So if we take a look at the on the left side of the screen where it says May 1st, 1982 to December 31st, 2002, you can see this individual has $62,000 of contributions made during that time period. As you move to the right, you'll see that the pension factor at that time was 2.80. So you take that factor times the $62,000, the person had earned a pension of a 1,700 bucks during that time period. And you build on those pension earned over the years to come to that $2,919. So now let's say the person decided to retire earlier and decides to take their pension at the age of 59. There you can see that there is a reduction of the pension because that's considered a early reduced pension because they are taking the pension earlier. The person's pension would be reduced by 36%, and the person would qualify for a pension of approximately $1,800 for the rest of their life. Okay, so this is just to give you an idea of how the pension is calculated, what scenarios would play out if you take it earlier than when you're eligible, etc. Now, there's a couple of things to note when you're making the decision on your pension. A couple of things to think about is, at the time, the option forms that are presented to you when you're taking a look at the different options, your spouse that's identified on the form, the option that you pick, the dollar amount, these things cannot be changed once the first pension payment has been made. So in the pension world, we like to use the term, your pension crystallizes. What that means is that once that first payment goes out, you can no longer change the pension option that you selected. The dollar amount, you cannot change that, and nor can you change the name of your spouse. That's important to note because if you do separate at a later time, after you start collecting your pension, and you pick the spousal option, that your spouse will always be entitled to your pension even if you separate. Even in the event that should your spouse die before you, the member, you cannot add a new spouse to the pension plan. So you pick a spousal option. That spouse that's named on that option is always entitled to your pension. If you separate, that person is still entitled. If your spouse dies before you, and you remarry after that, your new spouse is not eligible for the pension. Now, at this point, I'm just going to explain some of the options that are available to you. So, if you are married or if you have a common law, and those individuals would qualify for your pension. So, in Ontario, if you have a spouse, you must select one of the four spousal options, right? So, the four options that are presented, the first two are the joint survivor, 60%, and joint survivor, 100%. So what that means is that the member will receive a pension for their life, but if the member had selected the joint survivor 60% option, then if the member passes away first, the spouse will continue to get 60% of the pension. If you select the one called the joint survivor 100%, then what that means is that the member will get the dollar amount that's reflected for the rest of their life. Should the member pass away first, then the surviving spouse will continue to get the same amount that the member was receiving. Now, there are two other options called the pop-up. In these two situations, the same scenario where if the member picks the pop-up 60%, the member will get the dollar amount that's reflected for their life. If the member dies first, the spouse will get 60% of the pension. But then there's a pop-up provision. What that means is that if the spouse dies first, then the member's pension pops up and the member will get an updated, revised amount. And then there's another one called the joint survivor 100%, which means that the member gets a dollar amount for their life. If the member dies first, the spouse will get the same amount payable for their life. But if you pick the 100% pop up option and the spouse dies first, then the member's pension will pop up and will be increased to the amount that's reflected on your options. Now, if you have a spouse, you're legally required to pick one of the spousal options. But when members that have a spouse receive their options, they'll note that there are some other options listed: life only, the guaranteed 5-year, 10-year, 15, and if you're under the age of 65, a notched option. If you have a spouse, the only way a member can select one of these other options is if your spouse waives their entitlement to the pension plan. Okay, that's important to note. That's if your spouse waives the entitlement to your pension, waives their entitlement, then you, the member, can look at these options. So at the time you receive your pension option package, and if you have a spouse, there will be waiver forms that are provided. If your spouse is seeking to waive their entitlement to your pension, then the spouse would take the forms that are provided along with the options. They would seek legal advice. The counsel, the lawyer, would take that spouse and explain to the spouse that if they sign these documents, there would be no entitlement to the pension in the future should the member pass away first. And then, in that case, if the spouse agrees to waive the option, then you, the member that has a spouse, that the spouse has waived the entitlement, then you may look at these other options. Now, if you don't have a spouse, then these are the options that are presented to you. And again, all these options are payable for the member's life. So if you pick the lifetime only, that means that the pension continues for your life, but once you pass away, no further pension payments will be made. If you pick one of the options that refers to the guaranteed period, 5, 10, or 15, again, the options are all payable for your life. But if you pick one of these guaranteed periods, for example, if you picked a 10-year guarantee period and you die at year 9, your named beneficiary would receive the remaining 1 year worth of payment. But let's say again, you picked the 10-year guarantee, but then you pass away after 20 years of collecting the pension. Then you pass away, your beneficiary will not receive anything. You may select whoever you want as a beneficiary. So even if you had a spouse and they originally waived the pension entitlements and you decide to pick one of these guaranteed options, you can name your spouse as a beneficiary or whoever you wish to name as a beneficiary for one of these options. Now, if you're under the age of 65 when you request your pension options, there's another option called the notched option. And again, if you have a spouse, the only way you can select the notched option is if your spouse waives their entitlement to the pension. And again, so the notched option, what that means is that the member receives more money prior to the age of 65 because what it's doing is it's taking into account the old age security. So when you turn 65, your pension will drop generally by the old age security amount. It's important that if you pick the notched option, that you remember that you select this option because down the road, you become accustomed to receiving $1,000 every month. But then when you turn 65, your pension all of a sudden drops to $400 because the difference is being made up by the old age security. So just be mindful that if you pick this option, that you may need perhaps your situation or your circumstances or it's a preference that you may need more, you wish to receive more money upfront prior to the turning the age of 65. But then you need to remember that when you turn 65, your pension is reduced to reflect the change in old age security and the receipt of old age security. Okay. As I mentioned earlier, your pension is considered an asset. In the event that you start your pension, should you separate from your spouse, if you have a spouse at the time you start your pension, that individual is always entitled to your pension. And again, if your spouse dies before you and they were named as a pension on the pension originally, and then you remarry, your new spouse is not entitled to the pension. A couple of things to note here as well is that you can continue to work and collect your 353 pension. If you are collecting your 353 pension and working, your employer will continue to remit all contributions per the collective agreement. But one thing to note is that your pension will not increase if you're collecting pension and working. If you decide not to start your pension at the early retirement age of 61 or 62, etc., or even at the normal retirement age of 65, then you can continue to work and build your pension up until the age of 71. When you turn 71, by law, we are required to start paying your pension to you, right? So you can continue to work. You can continue to work until the age of 71, building your pension. If you decide to take your pension at any time earlier, even as early as age 61 or even earlier than that, and you decide to continue working, then your pension will no longer increase at that point. Okay. Now, you can start your pension as early as age 61, And then from that point on, it's up to you to decide if you wish to continue to work or not. Okay, folks, I'm going to break now at this point. Some of you joined the call a little later on, just so that people are aware. The call is being recorded, but I am going to open it up right now because it's not the usual way I do the presentation. So I'm only going to talk about the pension piece at this point. I'm going to recap for everyone. So those of you that are on the call, you should have received your estimate in the mail. I believe there's a couple people that joined after, so you should have received numbers in the mail. Those are estimated values that are in front of you. All those numbers you have, those are estimated options. They're not the final numbers. If you continue to work, those numbers will continue to increase. The numbers that are in front of you are before tax dollars. Okay, so if you take a look at your numbers, we tell people, estimate about 20% of tax to be taken off those numbers that are in front of you. Now, again, I'm just going to recap over the different options. So those of you that have a spouse, you'll see that there's the four spousal options. When you take a look at the options, let's say you take a look at the joint survivor 60%, which is the first one. Just note that whatever number's on the first line, and no matter what option it is, whatever's on the first line, that's the number that's payable for the member's life. Okay. If the member passes away first, then whatever number's on the second line is what your spouse will get. Okay, so you'll see there's two called a 60% and 100%, and you'll see the difference. One is member gets a number, spouse dies first, spouse gets 60% of the pension. If you do the other one that says 100%, the number doesn't change in the event that the member dies first. The one that says the pop up, that's the one with the three numbers. Again, the first number is for the member's life. If the member dies first, the spouse will get whatever's on the second line. But in the event if the spouse were to die first, then the member will get the number that's on the third line called the pop up. Okay, so we say it's like you're getting an insurance against your spouse, right? Nobody knows the circumstances, nobody knows what's going to happen in the future, right? So those are the different options that are out there. That's why we tell members that it's important that you and your spouse, this is a family decision when you're picking your options here, when you're taking a look at those numbers. And as I said earlier, if you have a spouse, by law, you need to pick one of the spousal options. If your spouse decides to waive their options to the pension, then you can look at those other options that are the life only guaranteed options, etc. Now, those of you that are on the call, you can retire as early as age 61. But the key here is when I say retired, I mean you can start your 353 pension at 61, but you have to continue to be a member at least up until the age of 62 to qualify for your international pension. And that's if you qualify for the international, if you have 20 years in the union to validate and to confirm if you're eligible for the international at age 62, you would have to contact the union hall, Barb at the union hall, to confirm that for you, right? So if your goal is to stop working at 61, start your pension at 61, but you don't want to work anymore, then you still need to continue paying your union dues. You have to make sure you have 20 years in the union, and then you would have to qualify for the international pension. So now, just a couple of things, that, I like to just to tell people is that when you're looking at the different options, we've had situations where people have spouses have waived their options to their pension. Again, this is just for people to think about, not telling you, advice or anything like that. We had a situation where the member's spouse waived their entitlement to the pension. The member picked a life only pension. The member got the first payment. The very first pension went to the member. The member died the following Monday after that first pension was paid out. That means that the surviving spouse got nothing from the plan, the pension only had to pay out one payment to the member. We've had other circumstances where a member will pick their option, first payment goes out, and then they panic because they're not happy with the option that they picked. Again, you cannot change the option once you pick it, right? So just be mindful. And we tell people when if you have a spouse, the decision that you're making on your pension should be between you and your spouse. If you don't have a spouse and you're looking at the different options, it should be based on your needs, not on the needs of thinking about a beneficiary down the road or things like that, right? Again, the pension is meant for you, the member. If you have a spouse, then it's, joint with you and your spouse. If you don't have a spouse, then it's about you first when you're picking these options, right? As I said earlier on the presentation, you got to think about in the future if you are going to live until the age of 85. None of us have a crystal ball, so we don't know, who's going to pass away first if you have a spouse or not. But you have to be mindful that you've seen over the last number of years of the cost increases. Your This pension does not increase, right? So there is no increase to the pension. It's Do note that there is the potential for the pension could be reduced. There could be an increase in the future. We don't know, right? But be mindful to think that the dollar amount that you're getting is the dollar amount that you're supposed to get for the rest of your life, right? So you know what a dollar buys today versus what it bought 20 years ago. Now, the next piece that I just want to explain to everybody, or just to get people's feedback on, is that you can start your pension as early as age 61. My first question is, if there's people on this call that are going to start their pension as early as age 61, but are going to continue to work, then it doesn't matter. Right. Okay. But just remember that once you start your pension, if you keep working, your pension doesn't go up. Is there anybody on this call that wants to take their pension at 61 and not work anymore? If you're going to, this is where it's important. So earlier I mentioned that there's the contribution statement where you need to find out your hour bank balance. Okay. So you can start your pension at the age of 61. You start your pension at 61. You're going to be moved to the retiree benefits. And I'm going to talk about retiree benefits in the next slides, right? But once you start your 353 pension at 61, you get moved to retiree benefits. If you no longer want to work, the issue is that the international pension, you have to get to that to qualify for that in order to fully retire. So what that means is that from the age of 61 to at least the age of 62, you have to continue paying union dues. But if you don't want to work, you need to know what your hour bank balance is, right? Because you need to have 135 hours in your hour bank balance to cover yourself for benefits for every month. How do you find out your hour bank balance? You log into MyTBIS. Under the My Profile page on the bottom of the page there on My Profile, you'll see it shows your hour bank balance, or you can take a look at your contribution statement. Okay. So at minimum, you need 135 hours each month. If you don't have enough hours to carry you over, or if you're not going to qualify for the international at the age of 62, let's say you qualify at the age of 63 and you have no more hours, then you're going to be offered the option to pay for your benefits. Okay. So, but you cannot have a gap. If you don't make a payment, if you don't notify us, if you don't go back to work, whatever the reason may be, if you fall out of benefits, you will lose your rights to the retiree benefits. So it's very important that if you're 61 and you choose not to work anymore, that you continue to pay your union dues. Then you have to figure out if you have enough banked hours. If you don't, then just be mindful that you may have to pay for your benefits to bridge the gap, but we will notify you if you need to pay or not. Okay. But in order to fully retire, you have to qualify for the international. And to qualify for the international pension, you have to have at least 20 years in an IBEW local. And to confirm that, you have to check with Barb at the Union Hall. Okay, so if you call Barb at the Union Hall, she can confirm for you, unless you're 100% sure that you've been in the union for at least 40 years and you don't need to worry about that. Okay. So also note that as a member of the IBEW Local 353, you also have your IBEW Local 353 RRSP, which is separate and apart from your pension plan. Okay, now remember that your RRSP is with Canada Life. It is self-directed. That means that it's up to you if you want to make a withdrawal, if you want to make changes to your RSP, if you want to continue to keep the investments with Canada Life. That's totally up to you. But just remember that this is another source of income is your IBEW Local 353 RRSPs. Okay. As taxes related to your pension plan, the RSPs, when you're collecting your monthly pension through the IBEW Local 353, the payer of your monthly pension is CIBC Mellon. They will, by law, withhold the necessary taxes at every payment. If you wish to increase those amounts, the tax amounts that are being withheld, once you start collecting your pension, then you can contact CIBC Mellon, and you can request that they withhold further taxes off your monthly payment. That's a personal decision, but you can talk to your financial planner, your accountant, to determine what's the best options out there for you. I know many times people ask about pension splitting with a spouse, etc. Again, do take the opportunity to talk to your financial planner or investment accountant or tax accountant about those different scenarios and options that are available to you to help reduce your taxes. When you're ready to start your 353 pension, just make sure you confirm the date. When you're ready to retire, meaning that if you want to make that decision, if you want to keep working or collect your pension and keep working or not keep working, but do give us a call here at Tevis. We do suggest that you call us at least 3 months in advance to your retirement date, just so that you get the paperwork. If you have questions, you can review them, and that gives us enough time to ensure that your first payment is actually made on your retirement date. But if you don't, then your first payment may come after you've retired. But it'll always go back to your eligible date of retirement that you've selected on your forms. Okay. And then the final thing is, confirm if you're eligible for the international pension. Again, that's something that you would have to contact the union hall about. And that's when you wish to fully retire. At that point, that's when you contact the IBEW Local 353 to determine if you qualify for the international pension. Now we'll start talking briefly about the retiree benefits. So once you start your 353 pension, then we refer to you as a retiree. But in the sense that because you're collecting your 353 pension, we refer to you as a retiree. And at that point, you are moved to the retiree benefits program. Now, in order to qualify for fully retired, what that means is that when you no longer work and you no longer pay union dues, at minimum, you have to be age 62. So there is a gap between the age of 61 and 62 because you can start collecting your IBEW 353 pension as early as age 61. But at minimum, you have to continue to pay your union dues. You do need to carry yourself up until the age of 62 at minimum in order to fully retire. So in order to qualify for fully retired, international rules apply. And what that means is you have to be at least the age of 62. You need to be receiving your international pension. You need to be receiving your 353 pension. You need to be in the I should say the group benefit plan at retirement. And you have to have been in the benefit plan for at least 36 of the 60 months prior to retirement or had 39,000 contributory hours. Okay. Once you fully retire, you no longer pay union dues, and you're officially in the retiree benefits program, and you can no longer work for an IBEW Local 353 contractor. The benefit plan is a comprehensive benefit plan. On here, we see a couple of items that are not eligible once you move to the retiree benefit program. So there are drugs that are not covered by the Ontario Drug Benefits Program that applies at age 65. There's the short-term, long-term disability insurance that you're no longer going to be qualified for, sub-benefits, critical illness, and spousal and dependent life insurance. Okay. Your retiree benefits program provides you protection from many medical costs in retirement. This distinguishes you from a unionized worker versus a non-unionized worker. The IBEW Local 353 benefit plan is self-insured. So that what that means is that the working members that continue to work once you retire, their contributions to the benefit plan are being directed into the benefit plan, and those contributions are what's used to pay for claims for retirees, for active members. When you were working as a working member, your contributions went into the benefit plan, and those contributions are paying for the benefits out there. So it's all of us that are contributing to the benefit plan, that when you make a claim for simple things as eyewear, the glasses, let's say they cost $750, it's the benefit plan that's paying the $750, not the insurance company. The insurance company is processing the claim. We are paying the insurance company an administration fee to review the claim and issue payment to you. But at the end of the day, we are still all paying for that claim to be processed. When you retire and are in the retiree benefits program, your spouse remains eligible to participate in the benefit plan. And if you have dependent children under the age of 25 and in earn school full time, they would continue to be eligible for the plan. And in the event if you do have an overage dependent child, there's options to as well keep that overage dependent child on the benefit plan as well. There is a death benefit that's payable in the event of the member's death. That death benefit is $20,000. The first $10,000 of that death benefit is taxable to your beneficiary. There's also accidental insurance that remains in force. It is $10,000 for the retired member. There is a spousal accident insurance at $4,000 and the child accident insurance at $1,000. Okay. It's important that when you do retire, just take the time to ensure your beneficiary is up to date for your death benefit. In the event, let's say you do name your spouse as the beneficiary, should your spouse predecease you, you may want to update it at that time. Do log into my TBIS and you can see there at the time at this time who is your beneficiary for your death benefit. So now, if should you retire early, let's say you get the early unreduced pension at 61 and you're into retiree benefits, your drug would still continue to be paid fully by the IBEW Local 353 benefit plan. Eligible drugs would continue to be paid. What changes is that when you turn 65, the Ontario Drug Benefit, ODB, becomes the first payer of your prescription drugs. So what that means is that if the Ontario Drug Benefit Program pays any portion of your prescription drug, our plan, the IBEW 353 benefit plan, does not pick up the difference. You will also be responsible for paying the dispensing fee, which is generally around $6.11 for drugs that are covered by the government program. Um, do note that the plan does currently pay the first $100 deductible for the Ontario Drug Program. Okay, so now there are a lot of drugs that the Ontario Drug Program does not cover. So if it's an eligible drug, and the government doesn't pay for it or the government program does not pick up the cost of that drug, then our plan would pick up the cost of that drug. Okay. So just be mindful that if you are on medication, once you turn 65, if the government pays any portion of that drug, you would pay the difference if there's any remaining payments, and our plan does not pick up the difference. Okay. And you would also be responsible for the dispensing fee. Here's an example of some of the items that the government program continues to pay for. You can see that they're very minimal. Okay. If you have further questions regarding the Ontario Drug Benefit, contact Service Ontario, or you can talk to your pharmacist. If you're retiring prior to the age 65, you can talk to your pharmacist, to determine if the medication that you're currently taking, if it's covered by the government for planning purposes, right? So at least you have an idea of is there potential that you may be out of pocket for future drug claims. Okay. If there's at any time that you require a specialty drug, the pharmacist would notify you. We do use Facet to review the specialty drugs, and the pharmacist would notify you, and then you would obtain the forms from the website, facetprogram.ca, and you would present those forms to your doctor, who would complete them and then submit them to your pharmacy on your behalf. Again, if it's a specialty drug that's needed, your pharmacist would notify you. Now, as I said earlier, our plan is very comprehensive. Um, Generally, all other provisions of the plan remain the same as when you are an active member. So you continue to, the various benefits there, the orthotics, orthopedic shoes, semi-private hospital coverage. Just be mindful and be reminded that the plan always follows the reasonable and customary. What that means is that there is a reasonable cost to everything that's been determined by Canada Life and the various regulating bodies out there. So when you do go to the pharmacy, when you do go to a specialist or a practitioner, the dentist, these are all business owners uh, business individuals. They can charge over and above that, but you can always double check with them or Canada Life to confirm what the rates are. So the example on the next screen I'll show you is, let's say you go for a massage. You see a registered massage therapist. The current reasonable customary rate is $120, but you could go, maybe you have a massage therapist that you see that charges $150 for an hour. They can charge that. They can charge whatever they want as a business owner, but just remember that you will only be reimbursed up to $120, and that's called the reasonable customary rate. Other benefits that are available that remain in force is you have the $2,500 paramedical per calendar year. There's the different practitioners. You can mix it up with the massage therapist, dietitian, chiropractor. You can mix that $2,500 amongst all those different providers. Then you have $3,000 for mental health service providers. Now, remember, all the different benefit buckets that are there available to you. This 2,500 or this 3,000 for the mental health, that's pertains to the member, meaning the member has their own $2,500 for paramedical, $3,000 for the mental health practitioners. If you have a spouse, they have their own $2,500 for the different practitioners for physical items, and then you have $3,000 for the mental health practitioners. Okay, and that applies to all the different benefits. Okay. We also have the in-home nursing. Again, this is not personal support workers. So if you need support in taking medication, if you need support after a surgery, wound care, different medication needed, things like that, and a nurse needs to come and do this, then you may take a look to see if the cost will be covered by the plan. But be reminded that this is not a personal support worker. Some of the other benefits that remain in force: eyeglasses, laser eye surgery, hearing aid. Retiree travel insurance is 30 days at this point. Information regarding the travel insurance is available on tbis.com and mytbis.com. Now be mindful that as a retiree, it's 30-day travel insurance. If you have any questions related to travel, you can contact Beneva at the number identified on the screen. Dental coverage is very comprehensive. Now, as you retire, if your dental needs become more on a major service side, but it shouldn't apply. It shouldn't matter if you're a retiree or an active member. Anytime you're doing an expensive procedure, anything beyond $200-300, if you want to make sure that what's going to be covered by the plan, how much you might be out of pocket, get your dentist to submit an estimate to Canada Life. Anytime, even if you have to buy a product, let's say you need a sleep apnea device, you want to know if it's how much will be covered by us, how much the government pays for, etc. Get the provider to submit an estimate to Canada Life. Dental work, same thing. Your dentist could submit an estimate to Canada Life, so at least right? How much do you need to pay prior to having any services or procedures done or any products purchased? Okay. As always, you can always reach Canada Life at their direct IBEW Local 353 Canada Life phone number, 1-844-232-4239. Those of you that have a spouse, and if your spouse continues to have benefits, you can coordinate your benefits. So what that means is that the member, as always, would submit expenses to our plan first. If you have a spouse and they have their own plan through their employer, your spouse would submit their own claims to their plan first for any claims they incur. But at any time, if let's say the member has a claim that our plan doesn't pay in full, and you're a member of your spouse's plan, you would submit the remaining portion of the claim to your spouse's plan to determine if they would cover any portion of that. And same thing with your spouse. Your spouse has a claim, they submit it to their plan first. If there's any outstanding payment owing, that let's say their plan didn't pay the full amount, then your spouse could submit the remaining portion to our plan along with the explanation of benefits, etc., to see if our plan will pick up the difference. So, those of you that have a spouse, let's say in the event that the member should pass away first, and you're in the benefit plan when you pass away and you have a surviving spouse, your surviving spouse will continue to receive coverage under the IBEW Local 353 benefits for 5 years at no cost. Okay. Again, this is current plan rules. Here's an idea of an example, I should say, of potential costs. So after the end of the 5 years, the survivor is provided the option to pay for their benefits. Okay, and here's the different options depending on your age. The standard plan, what that references is that we pay up to 75%. But if you want the deluxe plan, which is exactly how the plan is today, you want everything paid in full, except that would be called the deluxe plan. Okay. Now I know these are today's rates. Um, into the future when the time comes, depending on if there's a surviving spouse, the survivor continues to get the 5 year coverage should the member die first. And then if the survivor continues to be alive after the end of the 5 year coverage, then we would provide you the option to pay for your benefits. All this information that I just talked about regarding the different benefits, the different pension options, all this information is available on mytbis.com. So if you haven't created your profile on mytbis, do take the time to create your profile. Do log in, take a look at your beneficiary, your address, make sure your spouse is on your plan, especially when you're looking for your pension. And if you're traveling, things like that, you want to make sure the individuals are covered. Take the time to log in. And again, you would also log in to see your pension statement, contribution statements, and if it matters in a particular situation for you, you can see your hour bank balance on there as well. Also, if you haven't created a profile for Canada Life, please do so. This way, you can submit claims electronically to Canada Life. You can set up direct deposit. Again, you can review the different services that are available. And there's a lot of resources on there as well, a lot of retirement planning videos. You can access your group RSP information on there as well. So do take the time to log in. Once you are logged into the Canada Life profile, or if you've created a profile, you can then download the Canada Life app onto your smartphone. And what you can do then at that point is then you can download the digital drug card to your phone as well. Okay. Slowly, as organizations start to move away from the plastic drug cards, it's to get into the habit of, if you want to, if you wish, you may download a digital version of the drug card to your cell phone or smartphone, I should say. Okay. And as a reminder, there is a dedicated IBEW Local 353 telephone number with the Canada Life. The phone number there is listed here at 1-844-232-4239. Here's a couple of other benefits that are offered to the IBEW Local 353 retirees. The one benefit is the Member Assistance Program offered through TELUS Health. Think of the Members Assistance Program as a resource library. So if you're looking for a lawyer to help you do your will or power of attorney, if you're looking for nutrition information, if you're looking for a daycare for your grandchildren in your area, contact TELUS Health. And they can provide you information, resources, send you various links or to things in the mail, etc., to help you determine whatever information it is you're looking for. If you're trying to find a lawyer in your area, they can help you locate that lawyer. If you're looking for nutrition information, they can provide you different resource links online, or they can mail out packages to you, etc. So do take the time to contact them if you have any questions or anything like that. Teledoc, think of this as a medical second opinion. If you go to your doctor and they tell you you need to have knee surgery, but you're reluctant and you don't want to have knee surgery, you can contact Teledoc and they will literally take your file from your family doctor to review if the diagnosis is correct that you do need to have knee surgery. And if they believe that there's alternatives, then they would recommend those alternatives to you and your family doctor. So again, think of it as a second medical opinion. Another benefit that's available through Teledoc is something called the Mental Health Navigator. So if you or anybody in your family is suffering from mental or needs mental support, mental health support, or you're trying to navigate the system, you're trying to look for a counselor, or you don't know where to turn to for, advice on the medication, things like that related to mental wellness or mental health, do give them a call. It's all confidential. So both Teledoc and the Members Assistance Program are both confidential. But if you do need mental health support, you or your family members do reach out to Teledoc. The final, one of the other final services that are available through Teledoc that a lot of members reach out to Teledoc for is if you're looking for a family doctor or a medical specialist. A lot of people are being faced with the circumstance of their family doctor retiring, or they're unable to locate a specific medical specialist. Contact Teledoc, and they'll do their best to try to help you locate a doctor that's closest to you that both they may be taking on new patients or can provide the medical services that you're looking for. Okay. Again, so if you're looking for a family doctor or medical specialist, do reach out to Teledoc. Here we have a couple of QR codes. If you wish to download some of these applications or sites or links to your smartphone, you may take a snapshot of those QR codes and then just follow the instructions to access the links or place the apps onto your cell phone. No, now, we'll touch upon a couple of the government programs that are out there. Everyone is probably most familiar with the Canada Pension Plan, CPP. Just be mindful that the CPP is not automatic. You do apply through Service Canada if when you're ready to take it. You do need your banking information, your SIN number to apply. Now, if you decide to delay your CPP, it does increase over the years after you turn age 65. If you decide to take it early, there are reductions that are applied to it. This here just gives you an example of the current monthly amount that's payable. If you qualify for the maximum, you could potentially be getting $1,400 a month from CPP. You do note that the CPP does increase slightly every year based on the consumer price index. And this is inflation, things like that, may result in a slight increase in your CPP, right? But as you saw, now you're starting to put together where your income is coming from. You saw that you have your IBEW Local 353 pension. There is something payable from the international. You'll have income in your group RSP, the IBEW RSP plan. Now you see the potential monthly income that would be coming from your government plan. If you do continue to work, contributions can continue to be made to your CPP. That will increase your CPP as well. But again, you may wish to see if you want to take it earlier, but do note that there's reductions are applied if you take it earlier than the age of 60. If you delay taking it beyond the age of 65, there are increases applied. Again, do talk to your financial planner if you want to determine what's the best option for you as it comes to your CPP. There's also the Old Age Security Program, OAS. Generally, if you've been in Canada and you've been born in Canada or lived in Canada after the age of 18, have at least 40 years of being resident here, then you will qualify for the Old Age Security. This you can start at age 65. Again, you can delay it. Generally, the Old Age Security is automatic. They'll send a letter to you automatically to confirm that you wish to proceed in taking it at the age of 65. Here's an example of the current rate out there. So right now, if you qualify for the full amount, it's $727 per month. Generally, every quarter it may increase slightly, right? If you're over the age of 75 as of today, the amount it's slightly higher than what you would normally get starting at the age of 65. OAS can be delayed, right? And as you can see, the longer you delay it, there is an increase. As I said earlier, none of us have a crystal ball. We don't know how long we're going to live. If we're living until the age of 85, 90, do talk to your financial planner to determine what's the best step. What's also important when it comes to the old age security is that once you pass a certain income threshold, there is the clawback, right? So, for instance, as seen on this chart, depending on the year that you're in and the income that you've earned, Once you start to exceed approximately over $91,000, your pension, or your old age security, I should say, may begin to be clawed back. Now, if do talk to your financial plan to determine if you may be impacted by any clawbacks, especially if you're collecting your IBW 353 pension, and if you're still working after you turn the age of 65, or if you're taking income from other sources, do be mindful of that. And do talk to a financial planner if there's any concern on your part of any clawbacks. Here, I just like to give some examples of some other government programs that are out there. Here, you see that there are a couple of websites that you can visit. One of them is the government income program. What's good about that site is that you can type in, you're the province of residency, different circumstances that you and your family may be facing, and what it'll help is identify what other programs may be out there for you. Anybody can access this site. So if you have aging parents and you want to see what other programs are out there, if anybody may have a disability, any medical concerns or anything like that, do take a look on here because it's a good resource to help you identify what other resources may be out there that you may not have thought of. And also, the government of Canada also has a Canada Retirement Hub site. Do log into that site, and there's lots of information and resources posted on there about retirement planning. Now, I just finished talking to you about your CPP and old age security. Many times people don't know what they're eligible for, what they qualify for, what the amount may be. Is there a survivor pension, etc.? Do log into your Service Canada website. Take the opportunity. If you have never logged in, all you need is your banking information. Go to the Service Canada website. You create a profile on there. And then you can access your information. Your spouse can do the same. See what your old age security is. See what your CPP is. There's a nice little tool on the Service Canada website as well called unclaimed cash check payments. So if you ever received, a GST check, a rebate check that you never cashed, or if you ever got your annual income tax, if it was a rebate that you never cashed, the Service Canada has a link on your profile that if you see it there, unclaimed cash, there may be some money sitting there that the government may have owed you in the past, some money that you may have never collected. Okay, so do take the opportunity to log into the Service Canada site and maybe while you're checking to see if you have your CPP old age security there, what that amount is, maybe there's some uncashed checks from the government sitting there as well for you. A couple other items that I like to point and to remind people of some things that are very important is your estate planning, power of attorney. More than ever, if you've never done this, if you've never sat down with a lawyer or legal representative to talk about your power of attorney, do take the time now to think about it. It's not something that we all enjoy talking about, but it's very, very important. You know, what happens in the event that you pass away? Who will handle your estate? Who's your trustee? Who's your executor? What happens if you're unable to speak for yourself because you're, hospitalized? You're in a coma and you're unable to talk for yourself. Who is going to speak on your behalf? Who's your power of attorney? Who's going to pay your bills or make payments for your bills if you're unable to make it to the bank to pay your bills? And so do take the time, review, picking and selecting a power of attorney, having a will created. If you don't have a lawyer, you can reach out to the Members Assistance Program, TELUS Health there, and ask to find a lawyer for yourself. So if there's anything that you take from today's presentation, yes, it's about retirement, planning for retirement, but this is one of the most important things when you're planning for retirement as well, even for those of you that have grown children and they maybe have grandkids as well and they haven't done their will or done their power of attorney as well, talk to them about that. Make sure that you're prepared because no one ever knows what may happen in the future, and it's better to be prepared because if something does happen, sometimes it's too late and you can't do a will, or if your wishes may not be carried out to the way you want. Okay. So when you're ready to retire, you can contact us here at TBIS. We can review your retirement options with you. Do take the opportunity to understand the options. Log into the TBIS website, mytbis.com, Canada Life website. Review the various links that are there about pension. Watch the videos that are posted. Give us a call at least 3 months in advance to apply for your 353 pension. Make sure that you confirm when you're eligible for the international pension as well. Do take the opportunity to talk to a lawyer to ensure you do your estate planning, have your power of attorney and your will completed, and do take the time to seek legal and financial advice from qualified professionals out there. As you saw, a simple thing of going beyond a certain income threshold may result in having your old age security claw back. That's something that may or may not upset you or impact you, right? But at least you're aware of it, right? Um, so do take the opportunity to review this information. As always, keep up to date with TBIS. Take the time to log into your profiles. Make sure you keep your beneficiaries up to date. Keep your contact information up to date with us, your address, your email, your phone numbers. Even into retirement, more than ever, it's important to watch out and read the IBEW Local 353 and TBIS newsletters. These are always sent out by email. They will be physically mailed out as well. But sometimes the mail may be slow or you may miss it. But we do always communicate any changes or any important information. We always send out little pieces of information every quarter, various emails. Take the time to review them. Do participate in the union meeting, special call meeting, even as a retiree. Find out, call the union hall, participate in the retiree events, come out to special call meeting, stay active in the union. And as always, do call us here at TBIS if you have any questions or concerns. Do reach out to us here at 416-637-6789, or you can always email us at members@tbis.com. As always, we're always here to help you. So again, thank you for participating and listening to today's this webinar. But as always, if you have any questions, any concerns, do reach out to us. Thank you again. Take care. And anytime, reach out to us. Take care, folks.